What's going on, everybody? Welcome back to the Everyday Growth Advisors Daily Brief, where we plan to trade and trade the plan. I hope you guys are having a great weekend and a great week. This is going to be the first daily brief of the week here on a Monday, so I hope you guys are ready. Try to do these typically pre-market so that you guys have majority of the price action captured in, and let's get this market broken down as usual. Today on the S&P 500 and QQQ, we saw continued consolidation and movement to the upside. We are also looking at a possible over exuberance situation for a temporary wave down, which is going to be a short wave down, not a long wave down, not like the past corrections that we were looking at. So we'll break down the technicals in just a second. On the macro backdrop, last week we had market PMI manufacturing services index come in at around 62.6 and 64.8, which is pretty much made the Fed cause a meaningful upgrade to its inflation outlook by embracing a more overshoot of its 2% target for inflation. And now we're seeing that their 2% target is more sustained and more supported by the own notion. Also, Q1 2021 real GDP finalized came in at about 6.4% as expected. We see this as the first move of pronounced numbers, which will confirm the shockwaves from a restarting economy and revise our GDP growth expectations between 6.5% to 7% this year. So the macro backdrop seems very strong for the US economy, and we do see continued expansion of this economy that was once in lockdown, now opening up into a turbocharged restart. Right before we continue here, make sure that you smash the like button. Let's try to get these likes up, guys. It truly is really important for us to get these likes up if we want this to reach other people. We truly appreciate you supporting the channel and coming back to watch this daily brief every single day. So in other news, if you have been watching around and chugging along with the Chinese stock market, we have been talking about valuations being severely undervalued and broadly investable. These interventions by the government for anti-monopolistic practices ultimately create a stronger economy with higher consumer price parity, and so we do like this situation going forward. We think majority of the bad news is priced in at this point, and this gives us a runway for this undervalued 33% corrected market down and back to the upside. And that's mostly what I have for you guys for this macro breakdown. Let's jump into the technicals without a frown, downtown, and peel this onion. So, let's get it down. So on the S&P 500 this week, we can see that we have been moving up in a very, very strong wave up. Remember that this is usually when people will tell you all across everywhere, Instagram, blah, 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 YouTube, yeah, we are in a bull market, yeah, keep going, right? We are going to the moon, everything's stacked to the upside. Moving averages, up, this is the best bullish looking chart, I don't disagree. However, you need to remember that when a market moves to the upside, there is no straight line move. There's always a up and then a down and then a up and then a down and then a up. And this, as long as it continues to make higher highs and higher lows, we will be indeed in a bull trend. Now remember, we have upside targets at 236.60 to the 23.6 Fibonacci, which is the 430 level roughly. We were talking about the 429s last week on Friday on our last daily brief. We talked about a melt up happening, and the melt up is indeed following through this week, right? If you watched the previous daily brief, we already spoke about this. However, I do like taking hedges. I do like taking some kind of a short-term hedge against any market slide, right? It's always nice to be prepared when the market abruptly sells off, and obviously we don't see like a big sell-off just yet or any of this slowing down. But remember that as this market continues to go up, short sellers who are piling on here are constantly getting shorted out. Eventually, at some point in time, what's going to happen is buyers are going to fatigue. And when buyers fatigue and this market has been running up on such bullish energy, there will be no more buyers left. And when there's no more buyers left, what do you think is going to happen? That is right. It's going to drop like a brick back down, and we will see this market correct down just a little bit. We're not talking about a 5-10% correction. I'm talking about a normal 2 to 3% correction, which is a dip on the uptrend. Okay, so I am looking for that kind of a correction in the next coming week or so, and hence I have already opened up some hedges. Now I know many of you will be thinking, oh, but like don't try to short the stock market. I am not actually trying to short the stock market. I am just taking a downward position from my very, very bullish portfolio. So I have a lot of positions allocated to the upside, and I am taking a protection on them so that if a market event comes down and this market abruptly sells off in the Asian and London session, I will be actually protected when the market opens. You don't want to be caught off guard, and this has happened before throughout this year, at least multiple times, where institutions wait till after hours to short the market through dark pools, and then you're left with a losing trade when you wake up. Hence, I like to hold overnight hedges and close them out as needed when they reach a certain percentage stop loss. This gives me more flexibility and control over my portfolio in terms of risk, and even though I assign a very small percent of my portfolio to this, it allows me to benefit if a wave down comes. All right, so the upside targets remain 430, the 432, and the 434, 435, which are the three levels up here on the S&P 500, and that will be concluding it for the upside. For the downside, we do have 424 as a main level. 426 would be the interim first level of support, which would be $1 or $1.50 move down. And then if we do break all of these, then 422 will be the last level of defense, and 420 respectively. So it depends if we can even get there. I don't think we will. We are in a very bullish trend right now, and I don't expect this market to come down so aggressively right now. I think that majority of the stocks are going to continue to make higher highs, and that's how it's going to be for a while. Moving on to the QQQ here, very bullish action as well compared with the S&P 500. We see lots of bullish points being captured here. The 61.8 now acting as a support. We will see if we can hold above the 352 level and 353 level today. That will be the key level to hold today if we want to continue to the upside. And my upside target after this is actually 365. However, there are going to be a couple of other resistances here, but this is new all-time high territory, so expect this market to continue to melt up all the way till we get the extension of this big wave. This will also be the last wave of this entire Elliott wave cycle, after which we will see a big wave down for about 5% down to this channel here, possibly down back to the 332s and 330s. Okay, obviously we're not there yet, so let's not talk about that. But we will see a upside consolidation, which is going to be the distribution phase, and then a markdown phase after that. So we aren't going to be there anytime soon, so let's not talk about it now. For downside pivots on the QQQ, we are screaming for a pullback here. This has been a very long up wave. We need a breathe out right here in order to breathe in again. And so we really need to breathe downward here, and I'm looking at the 345 as a key level for a support here. 345 or even the 350 level. So these two levels are going to be key levels of support coming into this week. And if we do hold those levels, and obviously we might get a couple of rug pulls here and there, that should be nice levels for us to rest on before making the next wave to the upside. Excellent. Looking at the VIX here, we have been seeing some erratic behavior, lots of consolidation at these levels at the $15. I have debit spread at 2022 for the upside, not for anytime soon, but I bought a far expiry on them. Small allocation, not a lot of risk. As I mentioned, all my hedges are small, and I will be just holding those in case we have another volatility event. So keep your eyes on the VIX and make sure that you watch when people start to buy these out the money options. Boeing came down to the support as we expected here at the 239, 240 level. Pre-market looking nice, up about $2.80. We'll see if we can move to the upside. We have been talking about this one on the daily brief for a long time, and I've been bringing it up a couple of times here. The upside targets are going to be within the 260 and 280 range, so we'll see if this actually plays out the way that we like it. I just wanted to bring it to your attention that it is an ideal moment to get in if you were thinking that you want to take a long-term position. This is the moment. Next up, Arkk. This one has had an insane run since the breakout, and since I alerted you guys, this 23.6, 38.2, and 61.8, all three hitting targets, and we even broke above those now. So this actually, if we break above this level here today, the 130, 132, we might see significant upside all the way up to the 140s on the Arkk. So this is the levels at which we want to look at for the Arkk, and I think personally we may get a rejection here and come back down to the 38.2 or 61.8 at the 130 or 124 levels before moving to the upside once again. We need that sharp pullback in order to keep things running. It is important. Next up, BABA broken out of this down, this big descending wedge pattern, moving to the upside, came back down pre-market today to test this demand zone, and we should see a pullback here before moving to the upside back again. We're seeing a lot of this tech movement start to cool down a little bit, and we are expecting a short pullback before continuing higher. Neo moving to the upside. We broke out of this key level of supply zone here. I like Neo as a bullish trade. If we can consolidate above the $49, $48 level here, I will be willing to take this and play it to the upside into even the $60 levels for a nice swing. Next up, Tesla. I like this above $700 if it breaks out at the high, and then I want to play this up all the way to the 760s or even the 780s, which is the resistances up here. I will be waiting for a break and a consolidation above these levels before I take this. I think that a pullback would be nice here before we move higher. Roku, insane move to the upside, now looking like it's losing momentum. Candlesticks are starting to get shorter, and we're looking at this for a possible bearish pivot. Not a complete bear pivot, but what I mean to say is a corrective wave down. We might see a flush down to the 410s or 420s before moving to the upside once again. I do like the fact that we have been on an insane wave up on Roku, and we should see a wave down before continuing to the upside. So keep your eyes peeled out on this one. This is also looking overextended. Many of these names, as you realize, are looking overextended, and that's one of the reasons why I have a slightly biased slant towards taking a very short-term put on the market. Because if we do get a rug pull, it would be nice to cash in on those puts and then take those puts and profit them and then flip them to the upside for calls. And that's mainly all I have, except for the last one, which is Apple, which is breaking out of a nice little falling wedge. We would like to take this to the upside. However, we are waiting for Apple to cross above 136 and break above 136 with bullish momentum. We did get a little bit of that yesterday, but it didn't really manage to do that. It is the only stock which has not run, except for Facebook, Amazon, Netflix, Microsoft, Google, which have all run. So Apple is a laggard among all of them in the FANG, and we are waiting for this one to move to the upside. In the meantime, I think that if the market comes down, it's going to pull Apple down for one last wave down and then ultimately move up to these 3 Fibonacci extensions, which are at 140, 142, and 145. That's what I would expect with Apple here, and let's see if it does actually come that way. So we have a target up in this green zones here, and we have a possible pullback to this bottom zone at the 127 before we get that pull to the upside. All right, and that's all I have for you guys in terms of technical analysis today. I hope you guys are having a great trading day. Once again, smash the like button if this helped you out, and we'll see you back for tomorrow's daily brief. Let's do the conclusion now. So we see majority of the market in a kind of a bull over exuberant mode, which is not uncommon, and it's definitely something that we like, right? We've been waiting for this tech rotation back into tech for a long time, and if you have listened to all that we've been talking about on this daily brief for a long time, we've been talking about the Arkk fund being undervalued, we've been talking about K-Web and Chinese stocks being undervalued, and now we're finally seeing money rotate back into these sectors. We may want to continue to press the rally. However, you must stay hedged because you do not know how the market is going to react to situations around economic news and other kinds of catalyst events. Therefore, I like to hold some hedges, and you should do the same if you think that you want to have a downside pivot. Now, remember, if you don't want to hold the hedge or you don't know how to do it, the best next thing you can do is just hold some cash. Don't invest all of your money now, especially on a wave up. You should be holding about 20 to 30% cash right now so that you can buy the dip when a dip does come. And that's all I have for you guys. So I hope that you have a good trading day, and I'll see you on the trading floor. Remember that we are having our Discord channel. If you want to join it, make sure that you click the link in the bio where you can watch us trade live every single day and join the tribe. Peace, guys.